What is fair value gap? A fair value gap is a price imbalance created when the market moves too fast in one direction, leaving a gap between buyers and sellers. Think of like this. Imagine a store where items are selling too quickly. Some customers don't get a chance to buy at a fair price. That's what happens in the market. How does it form? A fair value gap appears when a big institutional order pushes the price up or down suddenly. This creates a gap between the consecutive candles on a chart. The middle candle has a large body, while the two candles on the other side don't fully cover its range. Why is it important? The market likes to fill gaps. Institutions often return to these gaps to rebalance the price before continuing in original direction. So, how to trade using a fair value gap? First, identify the fair value zone. Look for a strong bullish and bearish candle with a gap in a price. Mark the unfilled gap on your chart. Now, wait for retracement. Price will often come back to fill part of the gap. This is where we look for trade entries. Now, how to enter the trade? If price return to the fair value gap in an uptrend, look for buy opportunities. If price return to the fair value gap in a downtrend, look for sell opportunities. Set stop loss and take profit. Stop loss goes just below the FVG zone for buyer or above for sells. Take a profit at the next key support resistance level. Here is an example of fair value gap trading. In the Bitcoin chart, you can see three candles forming. The first candle is green but small. The middle candle is big and green. Price jumped up fast. The third candle is red, indicating price slowed down. Now, here's what I do. In 15-minute time frame, I draw a rectangle from the wick of the first candle to the wick of the third candle. Inside this rectangle, we draw a line in the middle. Now, I wait for the price to come back inside this rectangle. So, our next question is, when do we take a trade? Now, I will open 5-minute time frame. If a strong green candle forms inside this rectangle and breaking out the rectangle, as I have seen the trend might change, means it might go uptrend now, and this candle here shows buyers are stepping in. And look here, the price never returned to this point. How much we should aim as a beginner? I would suggest you to take 1:2 risk reward, 1:3, and by practicing you can go up to 1:6, up to the level the previous support or resistance was. So what is risk reward RR ratio? We aim for 1:2 RR, means my stop loss is below the rectangle. I have to take the profit at twice the distance from my stop loss. You can see this trade goes beyond 1:12. But as a beginner, go for 1:3 and take your profit. Be happy with your profit. Don't regret that it goes up to 1:12. Learn this, practice again and again. This way, even if we lose some trades, our win will always be bigger. Remember, trading is not about gambling. It's about following a system, being patient and managing risk properly. If you found this video helpful, don't forget to like, share and subscribe to support the channel. It really helps me create more valuable content for you. Also drop a comment below. Let me know what strategy you want me to cover the next. Thanks for watching and see you in the next one.